Thank you. Thank you, Lyles, for inviting me, as well as Joe. Like Lyles said, I've been a lawyer in government contracting for over 30 years. My law firm is a national practice law firm. We have 6 offices, and I am the head of our federal government contracting group. My CV is here with you, but basically I do a lot of veterans certification, 8A, woman-owned, MBE, DBE certifications and appeals, bid protests, size protests, any kind of claims for money from the government, as well as disputes, and then also a lot of small businesses that I've been working with for years and new businesses that have come to me are looking to either add partnerships to their firm, add new partners to their firm, or sell outright, or large businesses are actually looking to acquire smaller businesses and they want to know the rules, because the rules are really important to remain certified, because as you know, as veteran businesses here in the room, that it took a long time and hard, arduous process to get CBE verified, and you don't want to compromise that by some basically just adding or changing partnerships or moving on for succession planning or estate planning purposes. So feel free, I love questions, feel free to ask questions anytime. Those of you who are on conference call, we welcome you. I think Joe periodically might ask if anyone else has joined the line, but we just ask you, anyone on the line, if you, make sure if someone could tell us you could hear us, but then if you could put yourselves on mute, that would be very helpful. Welcome. So this is what I said, a little bit about my firm. We also handle a lot of compliance, regulatory compliance, which might be labor investigations or any type of investigations. And we do a lot of merger and acquisition law at my firm. So this was a video, but I'm going to move on. So there's all different types of ownership changes. But these ownership changes can compromise certifications. So we just need to talk. We're going to be talking about structuring transactions. We're going to be talking about practical tips to attract investors. How many of you are more who own businesses are looking actually to sell a portion of your business to new partners, or sell outright, or succession planning? And other people I know are just very interested in buying even small companies, and we're going to talk about why people are doing, even your competitors, doing the things they're doing. And then if the firm that you're acquiring or you're selling has federal contracts, there's specific due diligence. And what I mean by due diligence is that what does the purchaser want to see or want to be confident of when they're buying your firm and buying those federal contracts, as well as tips for financing the transaction. So just rest in mind, did that? Oh, there it goes. If you could, during this workshop, if you could just keep in mind that any type of change in ownership, change in control, there's affiliation issues and personal net worth cap and size cap issues and notice issues. All those 5 categories can ultimately compromise your certification, or you could lose your certification if it's not done properly. Sir?
Would we be able to get copies of these slides?
I will send out to Joe, if you give me all your cards too, a modified version, just because you'll see some of these slides are just questions, and so. All right, partial ownership changes scenario. So what are the partial ownership, what do people come to me in terms of partial ownership changes? Well, they're looking to do succession planning. Succession planning doesn't necessarily mean it's going right to your children. That's the estate planning aspect of it, right? Succession planning is you want your firm to survive after you depart it, whether you're departing it because of unfortunate illness or you're departing it just because you want to retire or move in a different direction. So your firm will survive and everything you built to make that firm, but you're succeeding out of it. And then there's estate planning, and that is pure estate planning, where you want to, for instance, leave your ownership to your children or other family members. And then retirement. Or some people just want to infuse additional money into their firm. They need capital now. Whether if they're construction companies, they need to increase their bonding limits, or they just need additional capital to add more services, for instance, to what they're doing, to add new products. Some people actually add new partners because they're adding expertise. So for instance, there might be an engineering firm that wants to now provide architectural services. So they might find an architect to provide those services, but the architect says, I'm not bringing over my book of business or my knowledge of this art and my licenses for architecture unless you make me a partner or owner of the firm. So that's an example of new expertise to offer new services. And then sometimes just key relationships. You all know you might have competitors through the years that might looking to retire, but they've got some key relationships. Maybe they had to depart their firm, maybe their firm wasn't doing well, and you want to pick them up because of those relationships. And then a lot of times I get questions, Michelle, I want to offer ownership to my employees, my key employees, because they want to leave. They're going to jump ship if I don't, because I can't pay them that much money. So unless I give them ownership interests, they're going to jump ship. The problem is depending on how those ownership interests are given to them, you as veterans or minority business owners that have MBE certifications or DBE certifications or women's certifications can lose your certifications based upon just giving up 2%, 3%, or whatever percentage of ownership interest if it's not done correctly. So what are additional reasons that people add ownership interests? They want money. They sell their businesses. They want to get liquid. They're just burned out. Owners want to take a new direction, health concerns, or there's a lot of companies out there looking to purchase an Usd Hub Zone Woman-Owned DBE. Well, that's really easy if a minority wants to purchase. Let's say you're a minority person and you want to purchase a firm that was minority MBE certified. That might be an easy transition. But I had situations, it's a perfect situation, where it was a woman-owned business, very good business, and her key employee, who was the vice president, was a minority, and he wanted to buy the firm. Well, we did not want to lose the DBE certification, so we transitioned it so there would be a transitional ownership so it could remain a DBE firm, but as soon as he took on ownership, the WBE agency says no more WBE. We're going to withdraw that WBE, and then we move to get them MBE certified and then ultimately 8A certified. So you just have to also understand the agency rules because different agencies have different rules, and I'm going to give you several examples of that. So reality check. Many small businesses, for many people, selling a business or a portion is a once-in-a-lifetime deal. A lot of you as small business owners, what are you focusing on? You might be engineering firms, you might be construction firms, technology companies. You're focused on your business, you're focused on your employees, and you're certainly focused on getting new contracts and getting paid. You're not focused on those little details of ultimately succession planning or what does it take to attract investors so I can get more money into my firm. So we're going to talk about things that you should think about to make your business a little more attractive for that. And many owners fail to consider and address many key issues. I had a situation many years ago where a woman-owned company was purchased by another woman. It was a big purchase, a $5 million purchase. And they had really fancy M&A lawyers, et cetera. Well, and they had state contracts that included WBE participation. Well, they were told by their M&A lawyers, woman-owned business, new woman. Well, they got decertified immediately because the new woman did not have the expertise to actually, or did not prove she had the expertise to control that firm. And so then they went into default with the state because they could no longer meet the WBE goals. So we had to undo the entire transaction, get the woman trained, and then she got recertified as a WBE. And so that's an example of key issues to address before the transaction closes. So big picture, partial ownership change, potential loss of certification. Plan in advance. You need key stakeholders. Key stakeholders could be not your accountants, maybe if your family members, if they're involved, your attorneys, people knowledgeable about certifications, consulting companies, whatever you feel like was key to this equation, they need to be on the team right away so they could start consulting with you and giving you ideas. So, you know, we not only consult basically on the certifications, but we try to consult and best on how this is going to affect you tax-wise, as well as how it could impact potentially your other family members. For example, you might be a veteran-owned firm and you might have a child that's also a veteran or service-disabled veteran, but you've got 3 other children and you want your firm to remain veteran-owned, right? So if you pass on your stock to your son or your daughter who may be a veteran, what happens to the other children? How do they get compensated? You surely don't want any disputes at the Thanksgiving table this year, right? So, you know, we want to take it all in consideration. How do we compensate the other children? And what is the timing for that succession, right? So the timing for that succession is really important because you want to remain a service-disabled veteran-owned firm or a DBE or A-Day or Hub Zone as long as possible, right? So you want to make sure that, and you want that new person coming in to have the expertise. And so when it becomes when you've transitioned, for instance, to your son or your daughter as a SDVOSB, and VetBiz reviews their application, they say, okay, this person has the expertise to continue to control my company. So that's all the planning you have. And welcome. I entertain any questions, but I'm going to keep going if there's not any questions. So what are partial ownership changes? Well, that's when we add new shareholders, members, or partners. You're adding someone to your ownership team. Or you might be eliminating partners. You might want to take out other partners or other shareholders, right? So you now own, let's say it was 51-49, you're going to repurchase that other 49%, and now you're going to own 100% or some other combination. Or succession planning, that's partial ownership changes. And there's a complete ownership changes. You do that with succession planning again, and an outright sale of the business. So a little bit about family things to consider. And for those of you who came in late, in the very back there's a little notepad if you want to take any notes. So you want to say, which of my family members do you want to take over the business? I mean, you might have some children that you really like, but you don't think they're going to be good taking over the business, right? Will the business be purchased by family members? And if so, will it be transferred by gift? And you're going to then take advantage of the gift and state tax laws or other estate planning vehicles, or are you going to have your children buy your ownership interests? Now, all of you in the room, are you all vet certified through VetBiz? So many of you are. So if you recall, VetBiz, the VA said, how did you acquire your ownership interests? We want to see the check that you paid to the company for your own ownership interests. And so now we have a situation, some agencies won't allow it. For instance, DBE, if you don't pay for that ownership interest or show that you've got the expertise to have that interest, you can't be certified. And so what I do with my women minority businesses, if they want to start giving their children interest in their company, I say you can gift a portion of it, but they need to pay for that ownership interest. Now, if it's an inheritance situation, for instance, by death, then the children don't have to prove that they've paid for their ownership interests. So what certifications can be compromised if I do this transfer? And recommendation is planning. So ownership of gifts. This is a true story. I said to a woman minority, she was woman minority, wanted to get 8A, and I said to her, how did you get the ownership interest from your dad? She said, by inheritance. And she had already applied to an agency and told the agency that. And I said, but isn't your dad alive? And she said, yeah. I said, that's not inheritance, right? Inheritance means he's got to be dead. And you've told an agency it was by inheritance and they believe your father is dead. So, when you make reps and certifications to a government agency, whether it's the City of New York or City of Los Angeles, that's a big deal and you've got to rectify that. And here's the DBE rules. This is an example of what I was telling you. This is from the U.S. Department of Transportation, Dbe Regulations, which is national. It's the same regulation in every state. And, I'm going to be, if you don't mind, everybody, if you're not take pictures of the slides, because I'm going to be giving them to you, and I get really distracted. So I apologize. I'm just really distracted. Go ahead.
Yeah, if the parent or other person is still alive, you talked about paying versus gift. Can you give them potentially, let's say the value, fair market value is $100,000. What happens if you say, well, I want to give $50,000 worth and take $50,000?
So you're saying gift and then sell in a combination.
Well, right, sort of a bargain
That
sale.
depending on it's a very good question. Depending on the agency, it is doable, right? So I'm going to give you this is great question in light of the next slide.
Also the 5149 you were talking about, that was in the business. That wasn't talking about the Senate elections today, right?
Here's the USDB. Here's the USDB regulations. It mandates, for the purposes of determining ownership, we presume as not being held by the DBE individual all interest in a business obtained as a result of a gift or transfer without adequate consideration from any non-disadvantaged person who's involved in a similar or same line of business. But they will take and then there's an exception, and that's inheritance, right? So that's an example of DBE. So you might be veteran owned, but you also might be a minority. And if you want to transfer your ownership interest to your son or daughter who's also a minority, you need to talk to a good counselor who understands these rules, because you might have to sell some of that. And then we could talk about how that sale is financed.
Following on the earlier question about a hybrid approach with gifting and partial purchase, is there some threshold?
No.
Minimum?
It's
Is
just,
it arbitrary?
it's
Is it
30,
case by case?
right, it's 30 years of experience. And what I call it, I should have another slide, it's called red flag indicators. So the DBE, when DBE people are being trained, they actually, I did a session last year for SAMI called DBE red fraud indicators. So they have red flags indicators. So if, for instance, when it's a 51 owned by a minority, 49 owned by a white dude, it's that's a potential indicator. If the minority doesn't have any experience in this line of business, for instance, so it's all a matter of what agency you're dealing with and what they say. Because if it was DBE, you see no gifts, right? But if it's veteran or WSB federal, it might be fine. HubZone, if any of you are HubZone certified as federal contractors, well, HubZone, it doesn't matter who owns it, as long as it's 51% owned by U.S. citizens. So they don't care, you could be red, green, blue, it doesn't matter. They don't care who you transition ownership to. It just has to be transitioned to U.S. citizens.
Is that 35% in the HubZone, in a HubZone section, or is that employee?
That's the ownership interest only. So in the other qualifications of HubZone is that the principal place of business must be in a HubZone, and 35% of all your employees must reside in a HubZone. Doesn't have to be the same HubZone.
Yeah, one other question. What if you have an installment sale of your stock? Let's say it's to your daughter, who's also a minority and veteran.
Mm-hmm.
And let's say it's $100,000, $5,000 down, $5,000 a year for 20 years. But if you die before she pays it off, then the rest is provided to as part of inheritance. Is that another approach?
That's a great way to structure it. However, they're looking at, you'll see in the DBE rules, real and substantial. And so I recently certified a minority firm through I do a lot of National Minority Supplier Council certifications. And those people, even though the price of the stock was about $200,000, he only made a $25,000 down payment. And they said, not good enough. And so we waited, and after we upped the ante to $95,000, then they certified him. They said that wasn't substantial enough for the amount. So it really depends on the agency.
But could the parent make a loan to the child or?
Well, we're going to
spouse?
talk about that, but I'll address it now.
Okay.
Once again, no,
All right.
I'll address it now because they're great questions.
Okay.
It really depends on the agency. And so, and it depends on what type of certification. So for instance, if you own a company and you're a male and you're loaning your daughter, a female, the money to pay for that, probably can't get a national WeBank certification. They don't like that because they say that the woman is unduly reliant upon non-eligible males for the financial aspects of her firm, you know, especially if you're involved. But if your daughter should get a bank loan, it wouldn't be a problem. Now, if you're a service-disabled veteran and you're transferring ownership to another veteran, or you're a minority and you're transferring ownership to another minority, let's say a son, and there's an installment agreement, they may well do that because they always say, I'm sorry, I skipped this, I went through the slide, when it's a non-eligible person that's doing the help, that's when they're, so if a minority is helping his son who's a minority, shouldn't be a problem. But when you're a veteran and you're helping your daughter who's a non-veteran, that could be a problem.
Well, you gotta know the rules, it's very complicated.
You know what? I love this stuff, but it does get complicated, and it depends on the certifications. So here's a really great rule for veterans that just was finalized a few weeks ago, October 1st. Sir, you had a question?
I just wanted to make sure I understood it right. You're saying that even though it may be a consistent SDB rule, that it varies from agency to agency and how that gets applied?
Right.
It's not SBA that decides the process? It's agency
On the
specific?
federal level, well, DBE is federal, but that's a different set of regulations, and they're very specific about how they do it. And that's all about all about transportation projects throughout the United States. And many of my clients who are federally certified are also DBE certified, because that's where a lot of the money is, especially those who are in any associated construction-related industries. But I'm going to go over the, so what happens is that if, for instance, I was a woman-owned firm and I and I passed away and I had sons in the business, the day I die, boom, no longer woman-owned firm. If you're an 8A firm, the same thing. If you're, depending on the type of agency, they want to see that, let's focus on veterans, that veterans are always controlling the company, all right? And so, but there's a specific exception, and here's an example. There's a service-disabled veteran owner, and he's got several of his family members in his business, and he is supporting those family members as well as his wife, or opposite, she could own the company and her spouse, but you get it, right? You're all supporting your families. So there is an exception for veterans, and this new rule says that if you're a veteran and you transfer ownership interest to your spouse, and you had a 100% service-connected disability rating or died as a result of a service-connected disability, and you were listed in the VetBiz directory prior to your death, then your spouse, your husband, or your wife can continue to run that company as an SDVOSB, get bids, and survive a bid protest for up to 10 years after your death. So that helps with the continuity, and that helps you to know that your children could be taken care of by that transition of business, or other veterans that you might have working in your business. The business doesn't have to fall apart because a lot of your business was through, for instance, the VA and SDVOSB contracts. But it says that it begins the date of the veteran's death. So you have to report that to the VA and show that the wife is now owning the shares, at least 51% of the company, or the husband. It's just important, it's the spouse. And it ends when the spouse remarries, or the spouse just relinquishes their ownership interest, or 10 years after the date of the veteran's death. So it's a 10-year thing. So that's awesome for a lot of veterans. Other veterans, as I do a lot of teaching and working with a lot of veterans, some of them have a problem with that, and I'll tell you why. There's nothing about control. And as you know, you're mandated to control your own companies, to be there on a daily basis, to have the expertise. For instance, you're a technology company, you're mandated to have that expertise in order to get certified, especially even in 8A, because you know you're certified by your primary NAICS code and you have to have that expertise. But the woman owner doesn't have to have that expertise. It says nothing about the woman has to control the company. So other people could be controlling that company as long as she owns the company prior to the death. So I think that that's going to come up, but I think they just wanted to get this regulation finalized. Sir?
I'm curious, obviously a lot of SDB OSBs are out there that have less than 100% service-connected disability. You can go down to 0 and still be SDB OSB. So this is great for those that have the 100%, but it doesn't seem to me that this is a good solution for survivorship for all the other SDB OSBs.
I agree, and I'm going to tell you another scenario. But it says, but they say, or died as a result of a service-connected disability. So they do, so you don't have to be 100% if you've died from a service-connected disability.
It's so easy to prove that.
I know. So here's an example. It's a client of mine and a dear friend. There's a service-disabled veteran woman-owned firm who is severely handicapped. She's quadriplegic, and she's not married, but she runs the business, and her mother is her caretaker, and her mother is in the business, and so are a couple of her brothers and other family members. And so because it says spouse and it doesn't say family member, that's a problem. Because if you're not married, let's say you're divorced, but your children are still working at your firm. Why does it have to be a spouse, right? So, for those of you who are interested in legislation, I would love to be able to give you some information so it's more inclusive, because it says only spouse, and yet a mother or a father could be, or a brother could be taking care of a severely disabled veteran who's running their own firm. Question?
Yeah, but just also, getting into all of the different gender issues, including if you have two non-married people living and working together, they're just not married, whether same-sex or not.
Correct.
So
there are, I think it could be improved greatly to help veterans and their families, but right now this is what it says. By the way, is this information helpful so far?
yeah.
Good. So partial, at one point I might take off my jacket. I don't mean to be uninformed. Well, okay, so what are partialship ownership scenarios? Employees, you're selling partial ownership to your employees, other shareholders, or new investors. Employee ownership interest to consider, stock options. So here's the deal. You want it, let's say you're 51% owner of a company and you want to grant a key employee one share, okay? It's a stock option, right? It's not exercise, it's a stock option. Well, the certifying agencies, including the Sba, deems that unexercised stock option as exercised the day you grant it. So therefore, you will no longer be a DBE, MBE, or veteran-owned firm under their rules because it's a stock option. So be very careful about that, okay? Now, can an employee pay market value of ownership interest? A lot of times, if you've got a successful company, your employees would love to take it over, or some of your employees, can they actually pay for it? So we're going to talk about various ways to finance in a little while, and whether you can loan the employee money. And you can, but it's got to be done right. Have any of you heard? First, I'll talk about Esop. You've all heard of that Esop. So that's when basically all the stock is owned by your employees. It's an employee-owned company. As long as you still own 51% of the stock, you could do an ESOP under the rules. But if it's totally, let's say you own 30% of the stock and all your employees each own 1%, it's not a veteran-owned company anymore. So if you're ever considering an ESOP, you should not only talk to your corporate lawyers, but you should talk to another lawyer as a consultant that has this experience so you won't destroy your certification. And then phantom stock. Has any of you heard of phantom stock? No. I don't know why they call it phantom stock. It's like the new limitations of subcontracting for those Those are all of you in federal contracts. So there's something called limitation of subcontracting. That rule is substantially changed. I don't call it a limitation of subcontract anymore. I call it a limitation on payment because that's really what it is. But going back to this, phantom stock isn't stock at all, right? It's not stock. You haven't granted any stock to your employees. I don't know why they call it phantom stock. It confuses people. But what it is it's an incentive to keep your key employees on board, okay? And what you want your key employees doing? You want them driving sales, and you want them increasing profit. And so it could be structured in many different ways, but basically a lot of people do it, and they'll say to their employees, look it, I'm not going to grant you stock, but upon a sale of a company, you will get X% profit from that sale. And on the sale of the company, who cares? You're not going to be certified anymore anyway, right? But that helps to incentivize your key employees to help drive sales and help drive profit. So does the transfer compromise require 51% ownership? So always ask, is it going to, and even though you don't think it does, it can. Like, for instance, stock options. Is the other shareholder a former 8A participant? Well, that's interesting, and I'm going to give you an example, a real-life example of how that mattered. And a company lost their 8A over that. Can other shareholders pay the market value of the stock? And shareholder buy-sell agreements. That is a very hot issue, especially in the veteran world. There was a recent case on that, right? Because as veteran-owned firms, you have to have the unrestricted ability to transfer your stock upon death, but anytime you're living. There cannot be any restrictions on your stock. And so when I put together shareholder agreements in the past, it would say that no, we would put all the restrictions on the other shareholders, but the veteran would say, no restrictions on my stock, okay? I can restrict your stock, but you can't restrict my stock. Well, it was tested, and through various cases, it went up to the Court of Federal Claims, and they said, that's not commercially reasonable. It's very hard to attract investors if you don't allow for this right of first refusal, or you don't allow for the right of other shareholders to buy the stock. So they did change that recently, but if you're DBE or your MBE or your WBE, that still could be the case. So once again, one agency's rules is different than the other agency's rules. So let's say another company wants to invest in your firm. Is it allowable under your small business designations? And what about affiliation? Do you all understand the concept of affiliation? So the SBA basically defines affiliation, and affiliation is not necessarily a bad word, except with small business contracting, right? So what happens is the SBA says that the SBA defines you as a small business based upon your gross receipts, right? But if you're affiliated with another company or individual, they could actually add their company's gross receipts to your company. You will no longer be eligible for the award of a small business contract, and or you could lose your certification based upon what this other company is doing with you. So example is a company had been DBE certified for years, doing about $13 million a year, going to apply for their 8A. And they were convinced it was a construction company, by another construction company in the same line of business, and they invested about 25% ownership interest into this DBE. They immediately got decertified, and then the municipality also started decertification proceedings. I was called in. They were a new client. They came to me, and we had to undo the transaction, and we got them recertified again. But we had to undo that entire transaction, and he had to pay those investors back their stock in order to remain certified because there was an affiliation. And the reason for that particular affiliation rule, it's called affiliation based upon common ownership, common management, is because small business set aside goals on state municipal levels, and as well as on the federal small business contracts. They want small businesses doing the work. They don't want any large businesses involved. And why? Because large businesses can't take advantage, of these small business programs, and they're trying to prohibit that. All right, so another example of affiliation is called an Extensible Subcontractor. Is under the Extensible Subcontractor rule, even though you're a small business and you were awarded a VA contract, let's say for medical gases or for hats or for pharmaceuticals or for construction or technology, you have to be performing the vital and primary elements of the contract. If a large business large businesses are always allowed to be your subcontractor, but if they're really performing the work, they could be deemed ostensible, and the SBA will add your gross receipts with theirs, and you'll be no longer deemed eligible for award.
And that's called what again? Ostensible?
Ostensible subcontractor. Another area of affiliation is affiliation by negative control. That means that there's negative restrictions on your bylaws, for instance, or you've got contracts with negative control in it by, let's say, a prime saying you can't contract with anyone else. That's negative control. And then there's a contract, and then there's something called the 70% rule. It's another affiliation. 70% rule is if you, let's say you are a very successful business and you've been in business for 8 years, but 70% or more of your revenues is coming from just one other customer, not the federal government, but another commercial business, you are deemed affiliated because that's the 70% rule. So because you're unduly reliant upon another firm. Then there's another rule of affiliation amongst family members. If you happen to have a business and your family member, your brother or your sister also has a business, and of course you're sharing the same accountant, you help each other out, you cross-collateralize your loans, you do all kinds of things to help your other family businesses out. Well, that's an affiliation based upon familiar relationships, and the SBA says unless there's a clear line of fracture, you're going to be deemed affiliated, and we're going to add your gross receipts together with your family business firms. So what does doing business mean by the SBA? Doing business is financial support, sharing employees, sharing resources, sharing facilities, and even joint venturing could be deemed an affiliation. So you got to be careful if you're doing, when my clients hear about that, they call me up and you're like, ooh, I'm doing business with family members. I said, okay, let's discuss it. How much business are you doing with your family members? This is being recorded, so if you mind not recording, I get very distracted. I'm so sorry. I don't mean to be rude. Like I'm just watching you as opposed to looking at them, so I'm sorry. And then here's the real pickle. And that's, is it allowable? Is this transfer allowable under the IRS codes? And I'm going to give you a crazy example in a few minutes.
Question, with respect to JV, is it only a concern if you're in a JV with a family member, or is it a concern if you're in a JV with any organization?
Well, the laws for small business contracting with the federal government is that any small business can joint venture with another small business. A veteran can joint venture with a veteran, can joint venture with a hub zone, a woman firm, any small business firm. But a small business can never joint venture with a large business, or there is no definition of large business under the SBA rules. In fact, the SBA considers, they call their definition of, I call large business, is they call it an other than small business. So lately, just to let you guys know, it's personal. I've been on a diet, and I call myself other than small right now. There's a really cool mentor-protege program. You may have all heard about it. It's awesome for small businesses in terms of the type of assistance they can get for a large business. So once again, the rule is a small business cannot joint venture with a large business unless that large business is approved mentor under the SBA mentor-protege program. And then they could joint venture till the cows come home as long as the joint venture agreement is compliant and they comply with the joint venture rules for mentor-protege and joint venturing as two businesses, excuse me. So another reason why the mentor-protege program is so attractive right now for mentors, because you want to attract the best mentor, here it is right here. Notwithstanding the requirements, this affiliation stuff, work in order to raise capital for the protege, the mentor may own an equity interest up to 40% in the firm. So let's say you're a large business mentor, now is, you're working with them, you've got a 6-year joint mentor-protege agreement, and they're going to infuse $200,000, $500,000 of capital into your firm and take up to a 40% ownership interest. That's awesome. That really incentivizes that mentor to help you drive business, right? So not only can they joint venture with you in that scenario, but they're actually owning a part of your firm. So they've got skin in the game, big time. So it's very attractive for mentors. But I need to warn you guys, which the Sba rules don't really talk about, is I call it the morning after. So let's say somebody has invested 40% interest, so you own 60% of your veteran firm, and another large company owns 40% of your veteran firm. And that you decided after 3 years, mentor-protege firm can go up to, mentor-protege can be up to 3 years, and you can ask for an extension of another 3 years, so let's say 6-year term even. And then the mentor goes on their way, meaning there's no more mentoring going on, the mentor-protege agreement is terminated, but they still own 40% interest in your firm. What happens to the affiliation? It's back. And you could lose your veteran-owned status, your MBE status, your DBE status. I spoke about this issue in Arizona a while back, and somebody from the Arizona Department of Transportation said, we don't recognize the mentor-protege program for the SBA. And so if that happened, we will decertify them as DBE. So, you know, once again, when clients come to me and mentors come to me and say, Michelle, I want you to, because I do a lot of mentor-protege agreements, Michelle, I want you to do a mentor-protege agreement. You know, my mentor is an 8A, for instance, and I'll say, okay, that's great. I'm sorry, my protege is an M, and I'll say, is your protege WBE? Does she do business with the city of Atlanta? Is it an MBE? Is it DBE? Because if that's the case, they could potentially compromise those certifications. Now, maybe they don't care, because they're only going to go after federal business. And they're, you know, and someone's going to retire after the mentor-protege program. But maybe they do care. Sir?
Under the mentor-protege, the mentor, you said, could give up to 40%. Do they own 40% of the joint venture which is formed, or do they?
No, they 40% of your firm.
Of the okay.
Okay.
The base firm.
Right.
Okay.
And so, and you don't have to be doing business with your with your mentor. But if you do business with your mentor, you could be the prime and they could be the subcontractor, or you could joint venture. Mentor protege and joint ventures are two distinct things.
Okay, gotcha.
Okay? And then in the joint venture, you have to at least perform 40% of the work required, and they could perform up to 60% of the work.
You're saying the large business can perform up to 60% in the JV?
Up to 60% of the work. But it's the work that's required. So remember, if it's a construction company, the prime contractor, so your joint venture is a lot of people just do, what they do is they establish an LLC or a corporation, right? So you've got, whether it's mentor protege or just two small businesses. Here's business A, here's business B. They put together a joint venture agreement, all right? And they create a separate legal entity. The separate legal entity is the entity that is contracting with the federal government. That separate legal entity actually has a subcontract with your firm and with my firm, who are the joint venture partners. Okay. Is this helpful?
Yes.
So my question there would be, if the large business owns 40% of the small business and they are on a joint venture, first off, the large business has 40% of the deal from the small business side. Plus, you're saying that the large business can do 60%
Of the required performance.
Now, can that be done with the JV even though it may be a small business set aside they're bidding on?
Yes, because if the JV is, for instance, as long as you got a small business, they're approved mentor protege, and it's veteran owned. So as long as the veteran owns at least 51% of that joint venture, it's considered a service disabled or a veteran owned joint venture.
Okay, so you've changed it a little bit. So what you're saying then is, if it's a small business set aside, the small business has to do 51% of the JV?
No, they have to perform, they have to
They have to
own,
perform-
they have to own 51% of the JV, they have to perform at least 40% of the work.
My only point at the end, when I do the math, it's looking like the large business can have up to like 76% of the deal
Happens all the time.
in a small business.
Happens
That's-
all the time.
All right.
So that's why this mentor protege program, for people who really understand it, it could be quite lucrative.
Is it possible for us to overlay some of the SBIR rules and laws on top of this? Because so many businesses are SBIR
You mean doing research, and they're under the,
11 agencies of the federal government
Okay.
put out $2.7 billion every year in small businesses to do research that'll lead
Cor-
to some kind of commercial.
correct.
But those laws also allow that business on the back end of the thing to have unlimited sole source positions with every agency in the federal government.
Mm-hmm.
I mean, the largest sole source down select we've seen under that program is $800 million to one company.
Mm-hmm.
I mean, they're serious things. And in this kind of a situation, whether you'd want to maintain a affiliation like you're talking about or not, I'm not sure you would, because there, under the SBIR rules, they can do 99.999% of the work, and small businesses sit on their sailboat down in the Bahamas and send invoices to the federal government. I mean, that's all that does.
Right. We could talk offline about
They
that.
do that for the life of the company. I mean, this is-
Yeah, we could talk
I'm
offline
not
about that one.
sure, but it does impact, whether we want to do this or that.
Oh, absolutely, and that's why before you, if you're from a large business, before you invest in a small business, you want to understand all the rules involved, because,
My clients are SBIR clients.
right,
I'm a consultant that helps
Okay.
people go in and work with these things. I'm trying to understand this to help them as well as
Right.
other things. I'm not a lawyer, by the way.
That's okay.
I'm just an engineering consultant. But
But that's a little more technical, and I have a lot to cover, so I could talk to you afterwards if you like. Okay, so here's a current 8A firm. Current 8A owner looking to retire, so he's a minority man, and he's looking to retire but has 5 years left on his 8A. So he brings in another minority male partner who is 49% of the owner of the firm, okay? And he has an agreement to purchase, so it's like an option, right? The remaining 51%, right, after 3 years. Is there anything wrong with that picture? It's an option, right? Options are deemed exercise. But you say, well, who cares? Minority-owned firm, another minority. However, so it shouldn't matter, right?
Only do one AA.
There you go. But the prior owner used to own an 8A firm. And so when he takes out this other guy, he's going to be the one who is the eligible person maintaining that 8A. So the SBA said no and decertified them. So investments. So a lot of people take on equity investors, highly scrutinized by the agency, especially if they're in the same line of business. Could be definitely a red flag for affiliation. Does the investors, which they normally do, want options for stock? We know that answer. What if the authorized stock is already issued? People come and said, they say to me, well, we have new owners. My mom owned the company forever, and now we issued more stock to me. And we look at their bylaws, we look at their articles of organization or articles of corporation. We say, how did they issue more stock when there was 1,000 shares authorized, 1,000 shares issued to your mother? How did you get that stock? You don't own that stock. It was never authorized, right? It happens a lot because a lot of small businesses kind of put these stock deals together themselves. So here's one example, is investor loaning money to the company. A lot of times when investors loan money to the company, they want the option to convert that investment into stock, and that could be a no-no. And we're going to talk about SBIC options later in terms of investors. So selling a portion of your interest to a non-eligible person. So selling a portion, maybe you're a 100% owner, and now there's a non-eligible veteran, meaning he's not a veteran, or a service-disabled veteran, and now you're going to want to sell 20%, 30%, 50%, whatever that is. So you want to understand about those options, but also control. So let's say you've been a construction company all your career, and you want to now transfer ownership interest to, let's say, 49% to a non-eligible veteran, and you want to become a technology company because that veteran knows everything about technology and you don't know jack about technology. Well, that's about control. And here's an example of how the certification agencies look at this. Now, the SBA doesn't necessarily care in certain certifications, but this is how it's looked at. if I, as a lawyer, wanted to start my own, I'm a partner in my law firm, but if I wanted to start my own small business and become a woman-owned business and get DBE certified and everything else certified, WBE, and I could do that. I could do that as a law firm. I get certified in the NAICS code for a law firm, right? But if I purchased, for instance, a structural steel firm building bridges on the national highways, I don't know anything about structural engineering or structural steel, I couldn't get certified because you get certified in your expertise. And I could not walk up to any of the engineers, even though I've legitimately bought this firm, and look at these structural calculations and say, you better start over again, people will die, because the live loads and the dead loads don't make any sense, right? So they want you to be able to have that knowledge and expertise about the business for which you're certified. So there is control, and I'm going to go on to the next slide. Certification issues is a big part of this equation. You have to show genuine ownership and control. All right, so when I talk about control, I talk about two aspects in my mind of what control is. There is legal control, meaning what does the operating agreement or the bylaws say in terms of who's the CEO, who's the president, who has real control, legal control over the company. And then there's operational control. Who's got the expertise to run the daily operations of the company? They want the veteran, I'll focus on veterans, to have that operational control of the company. So we talked about having, many firms have many certifications. So even though the SBA may allow it for a woman-owned firm, if you're nationally WeBank certified, they can say no to it. So here's an example also. One of the national certifications, WeBank, they allow your stock to be put into, it normally has to be owned by U.S. citizenship, but there's an exception on trusts. They allow your stock to be put into a trust, but it could be an irrevocable or revocable trust, okay? But the DBE regulations say stock could be in the trust, but the owner has to be the grantee, the beneficiary, and the grantor, and it has to be revocable. And so if you should put your stock in an irrevocable trust, you would now violate the DBE rules and lose your certification. Wow, it's warm in here. Is it just me? Okay, so here's an example. BKM Global Corporation. The SBA regs require, maybe just even opening the door or something, or there's the heat on. Thank you so much, Laos. The SBA regulations require that in order for a concern, these are the VA regulations, a veteran-owned company must hold the concern's highest officer position, which is usually the president or the CEO. The SBA found that the president, rather than the CEO, is the firm's highest officer position based upon the bylaws. The bylaws also establish a position of CEO, but assigned no significant duties. So what happened is that the veteran, the real veteran owner, he made himself, or she made herself, the CEO, but in the bylaws there was no description of what they do. All right. Then they appointed a president. And the president, I see this a lot with a lot of woman-owned companies. The woman's the CEO, the men's the president. They're at the convention saying, hi, I'm a woman-owned company. And I'm like, really? But anyway, so the bottom line is that in this situation, the bylaws did not sync with what was really going on in the company. And so the SBA found that it was unclear from the corporate documents whether the firm actually had any other officers beside the CEO as of the date, and they were required to re-examine them. So once again, their corporate documents were not in sync, and they got protested. So another big protest, Veterans Contracting Group, 2017. Ronald Montana, a service-disabled veteran, owned 51% of the company, and another shareholder 49%. The SBA looked at the shareholder agreement and found upon shareholder death, incompetency, or insolvency, all the shares must be purchased by the corporation. The SBA's position at that time was that language restricted the owner's ability and his heirs' ability to convey their stock, thus placed impermissible conditions or negative control. That was an example I gave you earlier. But then, so the veteran was really mad, so they went up to down DC, the Court of Federal Claims. The Court of Federal Claims said something different, and this is really a big deal for the veteran community, because this gives you a better ability to attract investors to your firm, and that's why I have a slide on it. So what the Court of Federal Claims said is, in sum, the right of first refusal is not presently executory, right? It's upon death, or is a standard provision used in the normal commercial dealings and does not burden the veteran's ownership interests unless he or she chooses to sell some of her stake. As a result, that provision does not affect the veteran's unconditional ownership. So the veteran was allowed to maintain their certification, and they got re-put back into VetBiz database. So we talked about gifting, and I'm going to move on. This is one of my favorite bid protests. It's called Matter of Yard Masters. It was a family-owned business, man and a wife for 17 years, and we're going to talk about the ownership and control. So what happens is that they're family-owned business, 50-50, and they happen to go to a pre-bid opening, for information, and what they found out is, oh my God, this is WSB. We're only small business. We're a family-owned firm, and wife and husband each own 50% of their company, and so they made last-minute changes to their corporate organization so they can bid at a U.S. Army Mission and Installation Contracting Command for grounds maintenance services in Utah. They'd owned the company 50% each for 17 years. Well, they got protested. They said the protester said this is not a legitimately woman-owned firm. So the SBA looked at it. And YMI, which is the company, Yard Masters, told the SBA that after attending the site visit for a WSB set-aside, it would be advantageous to have Bryce, the male, send 1% of his stock to Sally. Okay, so now it's 51 owned by woman and 49 owned by male. And she could be the CEO. Okay, that's their deal. So they bid on it and they got protested. Sally stated, when asked by the SBA, that she acquired the additional 1% ownership from Bryce shortly before Yardmaster submitted its offer. Sally Wade stated, I made Bryce the COO where he oversees the operations. What does that mean? COO? Chief, that's exactly right. And he continues to be the president. It's a real case. And then the SBA said, well, how did you pay for your interest? And he goes, I gave her $100. How much more do you want me to show for that? This isn't the case. SBA held that there was sufficient evidence that she paid for her stock. So that was okay about ownership. That's what the SBA said. YMI claims that Sally's the CEO, but the corporate documents included bylaws did not support that. So the corporate documents basically said the president runs the company, and that's what it said in there. So the SBA said it's Bryce, the male, not Sally, the female, holds the highest position, and he appears to manage the daily operations. So they took away the set aside. If any of you are warm, feel free to take off your jackets. Some of you look so formal. It's great. So, but what about what another agency would do in this situation? Well, many woman-owned small businesses are also DBE certified. What does DBE say? DBA says that insufficient contributions include a promise to contribute capital, an unsecured note, mere participation as an employee, or capitalization not commensurate with the value of the firm, right? Remember that other example, he only paid $100 for that stock. The Dbe regulations go even further. They actually give an example. They say, example, an individual pays $100 to acquire majority interest in a firm worth $1 million. That is not viewed as substantial. No DBE for you. Different agency rules. Okay, then DBE says,
should they have done a valuation before and then?
yeah, or some aspect of evaluation, something like that. So they also go on is that you must presume that it's not held by a socially economically disadvantaged, meaning owner, DBE owner, if that interest was a result of a gift or transfer without adequate consideration from any non-advantaged disability, meaning the husband, involved in the same firm, which it was. They wanted to convert their firm from a family-owned business to a WSB. And they say to overcome it, it must be demonstrated that that transfer was made for reasons that other than obtaining the certification. Now, in the Yardmaster's example, wasn't that exactly why they did it? To obtain WSB certification? Moving on. This is a really interesting rule for Dbe rules, and a lot of cities have these rules too. If you cannot determine that the socially and economic disadvantaged owners, as distinct from the family as a whole, control the firm, then that socially and economically advantaged owners have failed to carry out their burden of proof. That's why a lot of DBE decisions will say, this is not a DBE firm, this is a family-owned business. So, another protest, pre-award protest, the Department of Veterans Affairs decision to cancel BTR's verified status from CVE after they submitted a proposal. The VA detailed the regulations regarding control. They say control means the day-to-day management and long-term decision-making for the VOSB. The CVE, Center for Veterans Enterprise, regards control as including both the strategic policy setting exercised by the Board of Directors and day-to-day management of the operations. This is the actual regulations. The veteran must be controlled by eligible persons who possess requisite management capabilities. So remember that example I gave you a few minutes ago? If I don't have any experience in technology, I couldn't be certified as a CV verified with the Department of Veterans Affairs if I'm trying to get verified as a technology firm. And they say, with the exception of a spouse or personal caregiver who represents a severely disabled person, owner, no such veteran or immediate family member may exercise control. All right, so that's their rules. Department of Justice release, rent event. Some of you may have heard of this case. A lot of people were outraged by it. 2 people in a business located in Kansas City were charged with 8-count indictment due to alleged conspiracy to defraud the federal government. Representing Patriot Company as an SDVOSB or veteran-owned small business where they were doing business in 9 different states. The indictment alleges, this is from the Department of Justice, this is their language, alleges Patriot was a pass-through or, quote, front company for a construction company owned by Wilson during the scheme. Conspirators allege that they used this veteran, I'm going to call him the veteran dude, Salatovich, I'm having a hard time with my eyes right now, the veteran dude's SDVSB status as a rent-a-vet to bid on 20 government contracts. So, moving on. According to the indictment, veteran dude worked full-time employee with the Department of Defense. Remember, he's supposed to have a construction firm, right? He's full-time employee with the Department of Defense. Veteran dude did not actively control the day-to-day operations or long-term decision-making. Veteran dude never managed a construction company prior to this, the indictment says, and he had limited experience. The indictment cites an email exchange in which Wilson discusses leasing an office for Patriot Company and writes, I would like for you to get a thing or two from Paul, veteran dude, to put in that office that's personal. Anything from his military, any plaques, U.S. Army stuff, or anything, if one stepped in, it would look and feel like a veteran company. The indictment also refers to a series of emails in which the veteran dude was still contemplating the start date of work with his own company after the firm had already obtained 10 government contracts. So pretty outrageous stuff. Some affiliation issues, we already talked about that, but always know that if you do make a change, even if you transfer 2% ownership interest to your daughters, your sons, or anybody else, you have to notify the VA. I had a situation where elder gentleman, service-disabled veteran firm, had a firm, and his son is a service-disabled veteran and worked somewhere else. And his son has friends who are also service-disabled veterans. And so we helped them establish this SDVOSB company, and then a couple years later he said, I want to retire, I want to start transitioning ownership to my son. And so we had the son purchase a portion of the ownership interest, who was very qualified, service-disabled veteran, understood that business really well as a couple of his friends who were also employees of another business. And so we did the transaction, we then notified the VA, and the VA goes, wait a second, and they wanted to see the resumes of everybody, they wanted to see who's really control the company to make sure the veteran's still in control, and then they approved the continued eligibility or certification for that veteran-owned firm.
Question. was this, if his son was not a CV, did not have the CVS status prior to assuming the, his father's company, how would that have worked out?
Well, the son wouldn't have had the CVE status necessarily. It would have been, because it's the company
The
that,
company has it, right.
right, the company has it. His son just happened to be an employee somewhere else and a service disabled veteran with a DD 214 and proof of his disability. So, and happened to have the same expertise his dad had. So that was an easy transition. We just had to notify the VA. Okay. Now, that same scenario would not happen if that firm was 8A certified. So this is the 8A rules. A firm can be terminated from our program, so the SBA wants you to get permission. They don't want you to ask forgiveness, all right? They didn't gain the SBA's approval before any change of business or ownership structure, and here's an example from the SBA. This is a real case. Brighter days. What happens is there is an accountant, you know, and talking to his firm, and they decided to convert from a corporation to an LLC for whatever reasons, tax reasons probably, but whatever reasons. It's innocent, same owner, nothing really changed. They just converted the tax status, right? Well, they got immediately terminated from the 8A program. They appealed, and the SBA said, too bad. It's of no consequence that they did not want to and violate the regulation. Any change in ownership can be grounds for termination. Once again, it's okay if you do that. You have to ask the SBA's permission first, if they're hub zone or if they're 8A. So, acquire.
But the ownership didn't change, the status in which the business do business.
I understand that they say any change in business structure, and that's considered a change in business structure. I don't necessarily agree with it, it just, that's their rules. So we're going to go on to corporate stuff. Really, you know, unless you're ready to go to sale, just understand that there's something called a stock sale, in which basically somebody is taking over normally the, you know, either a partial ownership interest in your firm, they're buying a partial, or another firm or person is taking over all the stock of your company, okay? That's considered a stock sale. Then there's an asset sale where you're not really selling your company or the stock, you're actually selling assets, maybe big pieces of equipment or something like that. An asset purchase can also be, some people do this, they say, Michelle, I want a novation. I want to novate, right? And here's why it's smart. So I'll give you a couple examples of novation. There was a 8A firm that was a technology company, didn't know anything about facilities maintenance, but wanted to buy the contract from a facilities maintenance 8A company. They wanted to buy the last year of the contract. And I'm like, why? He says, well, I'm putting new staff in, I'm getting organized, whatever. He said, because I want to buy the past performance. I want to do that last year because I want to become the incumbent contractor when it goes out for rebid and get the past performance. So that's an example of then you ask the government for a novation. Another veteran-owned firm, too bad, really didn't do well in business, but had great contracts. We just novated his contracts to another veteran-owned firm. We proved to the VA that they had bond, the new firm had bonds, they were capable, they had key project management, and they allowed us to novate several VA contracts, long-term IDIQs, to another firm. Is this helpful, everybody? Good. All right, so who am I going to sell my company to, right? I'm a small business. The only person who might be interested in my company is probably a competitor, right? So it's very hard it's not a readily available market if you're a small business, okay? A lot of small businesses actually end up shutting down because they can't find another person to buy their business because the other person can't afford it or for whatever reason, right? So tips to locate buyers. How do I find someone to buy my company? My tip is go first to your accountants. They know who wants to sell their companies. They know who wants to buy companies. People tell their accountants, I'm interested in buying company, and these are the parameters. Go to your lawyers. I know, people are constantly calling me saying, you know, I'm looking to acquire a company. And by the way, right now I know at least 4 firms that want to be acquired. So, so that's a good way to find out, you know, to find information as to who would potentially buy. Then it's your competitors. Your competitors may always be very interested in buying your company. Be very careful about that. So what's the first thing you think about?
Due diligence.
Non-disclosure, right? Everly, because when they want to, all of a sudden, the due diligence aspect, they're going to be seeing your financials. They're going to be seeing the way you calculate your profit.
Your bid forecast.
Right. So what my recommendation is, you got to be dead serious about that, and you got to know that your competitor, friendly or not, is dead serious about buying you.
How do, what do you recommend though, so that you're not turning over the, in essence, if you will, family jewels, letting them see all these different things, client names, et cetera, and then the deal falls through and they go after your clients, et cetera?
You know, that's what the non-disclosure agreement's about. It's got to be very tight. Right now, a woman owned a very successful $14 million a year firm, freight brokerage. She is looking to sell her company, and she said, Michelle, help me find investment bankers, brokers to help me. I go, wait a second. I have a client that's in your business. He might want to buy your company, and they do. So we're just doing the non-disclosures right now.
But it's a little like porcupines make love, very careful.
Right, very carefully, exactly. So price considerations. How do you price? So we talked about gifts. Be very careful if you just want to gift it. You know, what's the market value? Now everybody says, Michelle, do I have to get a formal valuation? The answer is no. You know, you're not a publicly traded company. Formal valuations can cost a lot of money, but if you're looking for a lot of money, if you're looking for 20, 30, $50 million, I would get a formal valuation, right? But you work with your accountant, and you work with potentially other consultants, and they can help you come to a good valuation if you deem a valuation's needed. Now, if you're selling to your children, maybe you don't need a valuation, right? It really depends. Sir?
Part of the challenge with valuation and market value, if you're selling an Usb, for instance, is the point you made earlier, that because of its nature and the control issues, et cetera, it's a very limited
Market.
out there.
Exactly.
And that has a negative impact if you're selling it to, for instance, somebody who doesn't care whether it's Usb, but you're going to lose those contracts.
That's a big deal. And so that's about disclosure. And so you've got, for instance, a company, I'll use construction company, and they're looking at an MB, a DB, a veteran, and they're like, oh man, this guy's doing $30 million a year and wants to sell his company. And I say, how much of that business is due to your certifications? If all your business is federal government contracting, small business set-asides, and or large or in state projects or municipal projects where they're using you for goals, and that certification will cease to exist the moment you sell, there's got to be disclosure, because you're touting about owning a $30 million company, but once those certifications are lost, it could go down to a $5 million company. And that's why the continuity of certification is so important for you, so you can get the best dollar, really. How do you do that? How do you transfer it to another veteran-owned firm so you could say, hey, another veteran-owned firm? Because of, you could always do parent subsidiary too, right? You could acquire another firm. But even if it's, what you want is, the best scenario is finding other veterans to purchase your ownership interest who would be qualified to continue that eligibility with the VA. So then you can get the best buck for your dollar in terms of gross sales and profit and all the elements of valuing a company. I'm going to take one from someone who's never asked a question. I'll come around.
Michelle, I tried to purchase another small business, and because they were doing work at FAA, and I wanted to get into that area, and their price was fine with me. The only thing I asked of them and my lawyers, we all talked about, is that their prime work was fine. I'm paying you for the prime work, but for your subcontracting work, until your prime on that as a subcontractor sign off on it, I put that money to escrow. And once they sign off on escrow, then the money will be released. They did not want to do that. They just wanted the money all up.
Mm-hmm.
And I didn't know how to handle it other than say no.
So that's also part of the due diligence process. So even though you might have a great contract, you might be a subcontractor under a contract with the state of New York or something like that, but if in the prime sub agreement and you're a subcontractor, there's a prohibition from assignment. It's called an anti-assignment clause. Then you're stuck. And a lot of times anti-assignment clause say, You can't assign without our written permission. But there's something called operation of law, okay? And by operational law it means the in total, you know, when you buy all the assets of a company, that is by operation of law, and that's normally an exception to the non-assignment clause. Really depends on what the clauses say. Good questions, everybody. So,
In the VA programs, you have two categories. You got the service disabled program and you have the regular veteran-owned. What if the veteran-owned business buys a service disabled veteran? Does that disqualify the entity as a service disabled veteran?
yes, it does. Because the owner, whoever is the acquirer, has to be eligible to be, you know, or have a service-connected disability.
Now, this is the key area that I'm interested in is a lot of my clients get SBIR so they can increase the value of their company, but because they have an unlimited sole source, most preferred vendor position over 8A, service disabled veteran, and everything else. SBIR companies have that advantage. And they're trying to increase the value of their company so they can sell it. But if they sell it, then the company then the ownership of that company is no longer the same company that had the first SBIR to begin with. Companies are selling it and getting away with it, but I'm trying to figure out, and I was hoping I could get some information here on how are they constructing those deals so that they maintain that sole source position with the world's largest purchaser of goods and services.
Sole source positions are totally different from certifications, and that's what this is about. So that's why I could talk offline with you, because you know, like for instance, I have a woman client. She is a WSB, she's WBE. She is really in the supplier diversity market. So she's WBE. And so she's got 5 key prime contracts with AT&T, Sprint, the big contracts, and they're installing cellular towers all over the country. Huge deals. Now she made herself, and they didn't care about her WB status. They didn't care about any of that. What they cared about is her capacity and her capability. Okay? So in that situation, she's got other companies looking to purchase her or invest in her. So I contacted the Women's Business Development Center and I said, look we've got a situation where it's a passive large company investor. Doesn't matter about gross receipts, because on a national supplier diversity market, nobody cares about gross receipts or personal net worth. All right? So would you allow a large business investor to invest in the company? And they said, well, Michelle, the large business investor, do they want to be on the board of directors? I said, absolutely no control whatsoever, passive investor. And they said, yes, we would allow it. Okay? Now, another thing. Are any of you certified with the National Minority Supplier Council? That's Supplier Diversity. Yes, a lot of people are. It's huge money, man, because everybody's got a Supplier Diversity program, right? Well, they've got this really unique program. I don't have my, but it's like a super program. And what they allow is they allow a large business to invest up to and take 70% ownership of your firm. You know how much money that means to you? You can get that money out while you're alive. So the only big requirements is that you have to be MBE certified, and that big business can have absolutely no control over your firm. Not on the board of directors, not officer positions, nothing. They are simply passive investors, and it works. I mean, it's a phenomenal program. Not a lot of people know about it.
That's probably the same answer for the SBIR. That's probably how they're doing it.
When a company, an SDVOSB sells to a VOSB and loses their SDVOSB status, for instance, and they had an SDVOSB set-aside contract, does that contract play out to fruition with its options, et cetera,
It should.
but they just can't recompete and get new?
It should. It really depends on a few things. It will depend on what the actual acquisitions of solicitation said, because it says that you need to recertify your status for, normally it's option years, and we want to not only certify your status, but we want to recertify that you're still a small business. or they might not require recertification, in which case they could continue throughout that term. It really depends. And it would, and you'll see in the actual new task order, the new solicitation for the task order, it will say, we require new certification. So if there's been any changes, we will need you to prove you're still an SDVOSB firm. Mostly I don't see that.
I don't see the.
Right. So now, selling your business to outsiders. What do your financials look like? What's your history of profits and losses? Ask yourself, what makes my business attractive? When you're out doing capability statements, well, what are you telling about your people about your business? Suggested winning formula, combination of good retained earnings, positive cash flow, low debt, ongoing lucrative contracts, good customer relationships, and collectible accounts. I was just speaking on this at the SAMI conference. Someone came up to me and said, I got horrible profit and losses. I mean, really, the past 3 years have been really bad, and I need to get out. And so they said, you know, I don't know, what could I do, Michelle? I said, there are companies and people out there, my brother-in-law, that buy distressed firms. You know, you still have a market, you just have to understand it, right? It doesn't mean you can't sell your company. It means you're going to sell your company at a much lower price. I got contacted by Alaska Native Corporation. They're specifically looking for distressed companies because they don't want to buy it. They want to buy it at a lower price, right? So, and then what are their sources of revenue? Determining price, then a lot of you have heard the term EBITDA. I'm not going to go into it at all, but valuation methods, their factors are what are the assets, such as cash, receivable, inventory. There's various formulas that people use to come up with a valuation. Ready to sell tips, prepared to demonstrate that your receivables can be collected. Now, this could be an outright sale, or if you're going to get a significant investor, they're going to want to see this stuff. And prepare historical financial statements. Do you have a business plan for the future? Talk to your key suppliers. Make sure that they're going to be continuity. Can your licenses be transferred? Current equipment in good order? What's the status of your leases and physical space? Any contract warranties pending that nobody wants to deal with your warranty problems? If you've got lawsuits, I recommend you resolve those lawsuits. Any current contracts going sour, you got to disclose it. Any outstanding employee issues? Are there union agreements? Are there any outstanding regulatory violations? Does the firm have any federal contracts right now? And then federal contracts, what you want to look at is, or what you should be prepared to share is a discussion of prime, and look at the prime contracts with the government, subcontracts, compliance. We have a client who is recently trying to buy a Department of Defense firm, and I said, I want to see the regulatory compliance. I want to see where's the ethics policy, where's the ethics training, where's regulatory, none whatsoever. And they're doing business with the federal government, Department of Defense. I'm like, this is really a risky transaction. They can, because it was really a family-owned company, they could show no regulatory compliance. Warranties, are there any pending bid proposals that you might get stuck with after you buy the company or somebody buys your company? Are there any pending investigations, audits by the Department of Labor, for instance, or EEO, for instance? You need to get all those resolved. Are there any terminations for default, threatened, or pending? Do you have, I had a client who's got close to $2 million in REAs with the federal government pending. When that money comes in, if and when it comes in, big dollars, but right now, they're strapped. Does the required contracts require security clearances? Can they show that they compliant with E-Verify, cybersecurity, the new Nist, any of you in technology, you know the new Nist regulations? Those Nist regulations, by the way, say that when you're preparing a bid proposal, there's a new rep insert that says you're compliant with Nist. And if you're not, that's a false claim. So any of you who have clients that or work in technology, be very careful about that, the new Nist requirements. Buy America, big deal. I'm sorry?
When did the NIST requirements start?
They started December 31st, 2017. Yeah, it's real. I only have a few more slides, unless you want me to quit.
No, I just need to
Okay.
skip up.
Corporate documents. You know, you could want to sell your company, but your corporate documents may say you can't. So make sure they're in order. Are there any outstanding loans to and from shareholders? A lot of times bank loans might hold their stock as collateral, so they can't dispose of their stock because it's collateralized. So, you know, you've got to ask those questions.
Does that limit the control, et cetera?
They say because it's a bank, there's an allowance for that, okay? So common elements of a deal process is putting together your confidentiality agreement, preliminary discussions, letter of intent, and, you know, if any of you are really like ready to go, just call me and I could, you know, share this information so you understand the process. Get your team together, make sure you have knowledgeable accountants and lawyers and bankers. Proper approach can reduce risks. I had someone come up to me, very lucrative $30 million fuel company, had union problems, and said, I got to sell. You know, I need to sell now. Couldn't sell, closed down the business, $30 million business. It's crucial to ask, can they afford it? Are they going to be putting up cash? Is there a bank loan or private financing available to pay you? Are you going to allow for promissory note? If there's an event of default, do you get your stock back? And there's a concept called earnouts. Do any of you know what earnouts are? Okay. So earnouts are used by, let's say you're going to buy a company and you're not really believing all the magical things their company says about you, right? So, I'm sorry, you want to buy a company and you're not believing all their magical things. Well, maybe it's $1 million for the purchase price. And you say, you know what? I'm going to pay you $800,000, but as the company makes money, I continue to receive profit that way. That's how I'll get the rest of my money. That's an example of an earn-out, okay? Then there's something called a holdback, which money, like you said, goes up in escrow. We do that a lot with our clients. Debt financing, loans provided by banks, funds, or institutional investors. Seller financing, meaning you're the owner and you're self-financing it. Talked about earn-outs. Then SBA-backed loans, and then something called key man insurance, and that's normally amongst shareholders. And so let's say there's 3 shareholders in your firm, and you're a veteran, and one of the other shareholders passes away, and the wife owns the stock. You don't want that. She doesn't know anything about your business, and so that insurance paid for by the firm will pay for her stock, and the stock will be redeemed. And that means your ownership interest then increases in the company. Equity investors, small business investment companies. These things are awesome. I believe I read that Whole Foods, maybe Starbucks, they were started, really, that's what took them off, is SBICs. SBICs are sanctioned, not sanctioned, they exist due to the allowance by the SBA. It's called a small business investment company. And there's about 350 of them across the country in every state. You can look at the SBA website and click on your state and find SBICs in your state or any state. Now, these are private investment companies, but they're licensed by the SBA. Now, the cool thing about that is, remember the affiliation? They're big business, right? That could destroy your certification, but not with SBICs, that's the reason they're awesome. So an SBIC could loan you money. An SBIC can take equity interest in your firm. SBA says it's okay because we're licensing them, right? They can invest in your business up to $5 million. There's about 315 as of that date. But here's what they say about affiliation for SBICs. There's no affiliation, that's supposed to be if a business is partially owned by an investment company or a development company that's licensed by us. So if Company A is 51% owned by you, and 49% Company A is 51% owned by Company B, a small business investment company, that is licensed under the SBA, that they're not going to be deemed affiliated. So it could be like a small business, right? So another way to finance changes. This is an awesome program. So the SBA provides SBA loans, and they do it under these circumstances, where you, as an existing shareholder, want to purchase the other shareholder's interest. You want to take out your partners. SBA loans will allow that, and resulting in 100% ownership by the purchaser. Or it could finance the resumption of ownership interest. So maybe your other partners don't have enough to pay you, or what happens is that you will just redeem. It's kind of like if I sell my stock back to Microsoft, you redeem your own interest back to your company, and the loan could pay for it. That's another way. Or a small business like yours wants to purchase 100% of another small business. I have a client that's Dbe, WB, WOSB. She's a licensed engineering firm, and she bought the largest licensed engineering firm who was also woman-owned in the state of Illinois. So her revenues went from 3 million to like 11 million, right? But so what happened is the SBA financed it because she purchased the entire 100% interest from another small business. Now, whenever that happens, they say, well, now that you're being taken out as an owner, can you remain with the company? The SBA doesn't want to see that. They say you can stay on for a short period as a consultant. That was it. Well, thank you all. Any questions?
Yes, I have one question. Let's say you're selling part of your company and you have a successful sale. What happens to the proceeds and what mechanisms are there to protect the proceeds of that, say, that you can pass on to your heirs or something like that? You never discussed that particular aspect.
Okay, so that's estate planning. I've got estate planning people on our team too. So you're saying, okay, I just sold my business and I have $4 million and I got that cash. What do I do with the money? How do I transfer that, start transferring it to my children? And there are estate planning mechanisms where there's lifetime gifts that are allowed that would protect you under the IRS code. There was one other, I think the slide went right past us, or it went on hidden or something. There's one other thing. So mentor and a protege come to me, they got it all worked out, right? I'm going to buy 40% equity interest in their firm. They worked out the deals. Michelle, apply for the mentor protege. I want you to do the deal for the acquisition after the mentor protege is approved, right? After we're joint venturing. I was like, so they're telling me, I said, wait a second. The protege is an S Corp. You're an S Corp. Only people can own S Corps. You cannot own a part of that protege. It's an S Corp. So what do? Well, we talk to accountants, and then we're converting that S Corp into an LLC. So the S Corp, big business, can buy 40% into the LLC. So people are structuring their transactions, and under the IRS code, it may not be kosher, legal, whatever, right? So be careful about that as well. I didn't really talk a lot about me, but I've been doing this for 30 years, and I represent veterans and 8As and hub zones and women's and DBs all over the country. And it's been an honor to do this workshop for you. And if you have any questions, I'll be here for a while. I thought we had refreshments, maybe not. Oh, we have food after this for everybody. And I'm here if you ask me anything you want. Was one more question?
No, I was going to say the great information is your first.
Oh, thank you.
Thank you very much.
Thank you.